The Nifty 50 company has announced its earnings. It does seem like the EBITDA margins are ahead of street expectations by a good 80 odd basis points. Of course, the board has also approved a dividend of around 21 rupees per share, and revenue coming in higher by around 12% on a year-on-year basis at 25,400 odd crores. Let's take a look at the profitability, and the profit number also looks a notch above street expectations. It does look like on an operational basis, we are seeing a number which is better than what the analysts were anticipating, but of course, a lot will depend on the kind of detail that the company will come up with. And we do know that it's been a relatively strong quarter for M&M. It's also been all about the SUVs, not just about them, but also the tractor segment. We've already had an update with respect to the kind of volumes that we can that we can expect. But on the basis of that, what has that meant, and how has that converted into revenue as well as profitability? Well, the company is looking at about 121 odd crores of a one-time loss, but we'll revisit that number in just a bit. On the whole, it does seem like it's an earnings which is a notch above street expectations, and by that I mean certainly when it comes to its EBITDA numbers as well as its profitability, and revenue also looking at a double-digit growth, which is of course a positive, at least in terms of the environment now at the moment. As far as M&M is concerned, we also need to remember that there will be a couple of aspects, and not just volumes, but also the kind of impact the commodity costs have had on margins. And as against that, even if there is not a big change in this gross margins, what is the company doing in order to arrest its overall expenses? And because of that, it does seem like at the moment where it's done a reasonably good job, at least with respect to what the street was making of it. And of course, we're going to get you more details when it comes to M&M. But for now, on an operational basis, we're looking at a 22% growth in its EBITDA, and that number certainly looks very strong. In fact, on a year-on-year basis, we are looking at 100 basis points improvement in its EBITDA margins, consequently coming in at around 13.5% against 12.5%. And I reckon that investors will take heart in that expansion in your EBITDA margins. And from what I can make is that your EBITDA margins were also a notch above street expectations, as is the case for revenues. The revenues coming in at well over 25,400 crores, and whereas the expectation was sub 25,000 crores, EBITDA margins also looking at an 80 basis points beat as compared to your Bloomberg estimates. So all in all, it does certainly seem like a good quarter coming through. A healthy quarter, and the question remains whether or not we can expect a little bit of an up move. That said, we already know that in Q3, M&M had outperformed and in terms of its quarterly earnings. So I reckon that we're looking at a little bit of a momentum building up there as well, not just in terms of volumes, but also from on the operational front. So, we continue to give you updates there. That's Mahindra & Mahindra for you on your screen. The stock has come off from days highs. It's at the moment flat, but again, we have 1.5 hours to go for analyzing this particular company, and we'll continue to get you more updates.